What's good, y'all? It is GNS Jackson. We are here with another video. The most important video is going to be the entry model. Everything that we've been teaching so far in this A to Z educational series comes down to this point right here. We're going to be talking about the dojis and engulfings. We're going to be talking about the fair value gaps, inversion fair value gaps. We're going to talk about liquidity, and we're going to talk about the EMAs. Okay, all of that together. We have a model here, step by step checklist. Oh, and liquidity, a step by step checklist, and we put everything together to take the trade. Okay, so let's get into it. You know how we do this? One take, no editing. So let's go. All right. So the entry model. Our entry model consists of top-down analysis, okay? Starting from the 4 hour to the 15 minute, which would be considered the higher time frame because it's higher time, daily, weekly, 4 hour, 1 hour, 15 minute, that's a higher time frame, okay? And then after we look at the 4 hour and the 15 minute, then we go to the lower time frame, which would be anywhere between the 1 minute and the 5 minute. Okay, so top down analysis, higher time frame to lower time frame. Okay, in the lower time frame, that's where we'll look for an inversion fair value gap entry. Okay, all of our entries are inversion fair value gaps. I have been messing around with supply and demand entries, um, so we'll get into that in the future. But right now, we're looking at inversion fair value gaps. Okay, um, so the last touch after that would be EMA alignment. So once we have the inversion fair value gap, where are the EMAs? If the fair value gap's getting inverted for buys, are the EMAs underneath? Just like the EMA video. If I'm going for an inversion fair value gap and we're inverting a bullish fair value gap, boom, inverted it, and now we're going for sells. Where are my EMAs? Above, just like the EMA video. Okay, so quick recap: top down analysis. Okay, higher time frame to lower time frame. We're going to check the 4 hour, we're going to check the 15 minute. Once we check those and we're aligned, then we're going to enter at lower time frame inversion fair value gap with the EMAs aligned. 4 steps: 4 hour, 15 minute inversion EMAs. Let's get into it. Step one, the 4 hour. Okay, how do I get rid of myself? Okay, cool. Step one, the 4 hour time frame. Okay, every day before we take any trade, we do a top-down analysis. We're gonna analyze from the highest time frame to the lowest time frame. With this strategy, we will start with the 4 hour time frame. So draw out your 4 hour fair value gaps and the inversion fair value gaps. They're the most important ones. They give us the bias, they give us the reason to take buys or sells. That's going to be determined based off of the 4 hour time frame. Look at this top picture right here. Okay, what do we have here on the top? We have an inversion fair value gap. And what do we have here? A regular fair value gap. What do we have here? A regular fair value gap. What do we have here? A inversion fair value gap. It just got inverted. What do you have down here? A regular fair value gap. Draw them out. Draw them out. Okay, this is the first thing that we're doing in the morning. Every day there's new fair value gaps created, draw them. This is what we're not going to do. Look at this fair value gap all the way over here. Okay. Look how it gets inverted once and then it gets inverted again. Delete it. Okay. It's going to happen a lot. For instance, look at this right here. This little fair value gap right here, right? Go across. Look how it got inverted once and then got inverted again. Delete it. Okay. Um, we don't use these fair value gaps um, we don't use inversion fair value gaps that get inverted a lot of times, or else we'll have hundreds of fair value gaps. Okay, so you keep the inversions and the regulars like this, like right here. We have a inversion fair value gap. You should know this already from the other videos, and we have a regular fair value gap. Okay, what do we have here over here? We have a regular fair value gap. It comes down, gets inverted, and then it goes back up and gets inverted again. Delete it. Okay. We can read that right here. Uh, Look at the top image. We are currently inverting a bearish fair value gap. This big one gets inverted, okay? And so that turns it into from a bearish fair value gap to a bullish inversion fair value gap, okay? Once it becomes a bullish inversion fair value gap, let's see if the next candle could come down and tap it to retest it. This is a bullish inversion. Let's see if it retests. Maybe it comes down here to the regular bullish fair value gap. But right now we have a bullish fair value gap and a bullish inversion. That's a 4 hour. That's what we wake up and see. Let's see if the next candle that's built comes down here. Okay. It'll be the next 4 hour candle. Let's see it come down here and then we push up. Okay. As it comes down into the bullish inversion fair value gap, let's see if there's a 15-minute resting. Maybe there's a 15-minute right here, right here. We can come back and tap into the 15-minute bullish fair value gap while we're inside of the 4 hour bullish inversion fair value gap, okay? So we want to have them align. We have the 4 hour inversion bullish. We wanted to come back and tap, but we don't want to just come back and tap and go for buys. Just, oh, let's go for buys. Let's come back and tap a 15-minute. That's the next step. You're going to have to watch this video a couple times, pause it. I'll try to make other videos. Join the Discord, and there are trade breakdowns of this exact strategy called the AP model. Okay, we use this every day. This is how we make money. And I have every week I do a trading breakdown of the week of the trades that I took that week. So this is just one example. Join the Discord. There's gonna be way more. Step 2, 15-minute. Okay, this is what the 4 hour looks like. The inversion fair value gap. We wanted to come back and tap. Okay. So what happens here? It closes up here. We want to come back and tap. What do we do? Tap a 15-minute fair value gap sitting right there. Perfect. Okay. So we have step 1 and step 2, 4 hour, and then a 15-minute. Perfect. Let's read it right here to see what it says. Essentially, we want the same thing to happen on all time frames. Are we tapping into a 4 hour bullish fair value gap? And then are we tapping into a 15-minute bullish fair value gap? Okay, we want to build a bullish story if we are bullish on the 4 hour. Okay, so if the 4 hour is bullish, why? Because we have a bullish inversion fair value gap, so we want to tap into the bullish inversion. Well, we want to tap into another bullish 15-minute. Let's tap into 2 and let's see how it reacts. So what do we have here? A bullish 15-minute. We tap into it. Now we're pushing off. Okay, that's great. So that's 2 alignment. Okay, 4 hour, 15-minute. That's a higher time frame alignment. Now let's go to the lower time frame. Okay, this is where it gets a little tricky, so follow me, okay? When we're looking on the higher time frame, we're looking for respects, right? We're looking for a 15-minute fair value gap getting respected. We're looking for a 4 hour fair value gap getting respected. We're looking for a 4 hour inversion fair value gap to get respected, okay? But on the entry time frame, which is the lower time frame, when we take our trades and enter the trades, we're looking for an inversion, because the inversion is the last piece of the puzzle that's telling us that we are gonna continue moving a specific way. What do we have here? Okay. Well, first let's read this here. Okay. Going back to the fair value gap presentation, which is on this A to Z series. Look at the inversion fair value gap section. Okay. The inversion fair value gap video. An IFVG is when a fair value gap gets inverted. Okay, a fair value gap is where candles are supposed to stop, right? Like the 15-minute. What do the candles do here? They came in and the 15-minute fair value gap and stopped and went up. Okay, that's what it's supposed to do. Instead, an inversion fair value gap is when that fair value gap gets that fair value gap doesn't stop the candles and the candles run right through it. Okay, that's an inversion. Fair value gap gets violated, it gets inverted. Okay, we want to enter when a fair value gap gets inverted. Okay, but before we do any inversion fair value gap, we have to check all of the time frames on the lower time frame. So from 5, 4, 3, 2, 1. Start from the highest. Okay, for instance, in this picture right here, we have a fair value gap right here. And what happens? It's supposed to stop the candle, right? Look how strong the candle goes through it. Boom, as if it doesn't exist. That is a signature in price. That is a signature of the market telling us that we want to continue going a specific direction. If the market respected this fair value gap here and the candle respected it, then we would anticipate it to keep on dropping down. But what did it do? The fair value gap did not hold and it got inverted. It got violated and we continued going up. So we want to enter around here and continue going up. Okay. This is on the 5 minute though. Let's say there was no fair value gap here on the 5 minute. They were going to go on a 4 minute. Is there a fair value gap here that we can invert? Okay, no. 3 minute, there's no fair value gap. 2 minute, okay, there's a fair value gap. And then boom, the candle inverts it. We're going to take it on a 2 minute. The highest time frame, the better. If there is a 5 minute like this one, but there's also a 2 minute, we're going to take the 5 minute. If there's a 5 minute, but there's also a 1 minute, we're going to take the 5 minute. If there is no 5 minute, no 4 minute, no 3 minute, no 2 minute, but there's a 1 minute fair value gap right here, and then it gets inverted, then we're going to take the 1 minute. The highest time frame is the most important. Okay, because we could be taking a 1 minute fair value gap inversion, but there's still a 5 minute that we have to wait for it to close, and it gets, let's say the 5 minute gets respected and then it falls down. Well, it's because you didn't wait for the 5 minute to get inverted. Okay, the 5 minute fair value gap. There are probably almost 100 examples that I have on the Discord of the trades that I've taken. And I have about 7 videos of trade recaps that have about 3 trades that I take a week. So there are more examples than this, okay? But look how it lines up. This is the 4-hour inversion, right? This right here. Look at this. The 4-hour inversion. That's the gray box. 4-hour inversion. What do? We came above and closed it. Then what was it? We came above and closed it. Then what was the next step? We came into the 15-minute. Okay, 15-minute is there, and we're respecting the 15-minute fair value gap. So now let's go up. What happens? Boom, we invert this 5-minute. That's telling me that we are respecting a 15-minute fair value gap, a bullish one, and we're respecting it and going up. So now the last piece of the puzzle is a fair value gap to get inverted. The fair value, this is like the last guard. We have the 4-hour check for bullish. 15-minute, we're in a 15-minute fair value gap. Boom, we're start pushing up. Check. The last piece of the puzzle, the last thing we have to beat is a fair value gap. That is going to tell me, and the market is telling us that nothing is stopping us right now. This fair value gap is supposed to stop us, and is going, okay? And we're pushing up. So, that's our entry model, okay? Right here, you can see the fair value gap on a 5-minute. It gets inverted, bang, and then we enter right here, and we go up. Okay, the last step is going to be the EMAs. Okay, go back to the EMA video, the PowerPoint. We use the 13 EMA, 50 SMA, the 200 EMA. If we're on a trade and look for buys, we need the EMAs to be underneath. That's on the EMA video. If we're looking for sells, we need the EMAs to be above. Look at this. That's the same exact, right? The 5-minute inversion, bang, we enter right here. But we're not just going to enter on any 5-minute inversion. Where are the EMAs? Underneath, out of the way. These are protection. And the EMAs are telling us where the trend is going and where it wants to go. When the EMAs are under us, we want to look for buys. We also have the 13 EMA right here. Boom, it closes above it. This is the bread and butter right here. Picture this and sear it in your brain. An inversion fair value gap with the EMA breakout. That is what makes the AP model. Let's break down this trade right here because you have everything. You have the 4-hour inversion fair value gap, the 15-minute fair value gap inside of the inversion, a 5-minute inversion fair value gap, and then the EMA alignment. That's the 4 steps that we talked about in the beginning. I talked about the 4-hour, 15-minute, then the lower time frame, and then the EMAs. For example, this trade we're looking to take buys based off of the 4-hour inversion fair value gap. Step 1. What do we do? 4-hour fair value gap gets inverted. So now it's a bullish inversion. What did I want to do? Come back and tap it, okay? Let's come back and tap it. When we come back and tap it, let's tap into a 15-minute. And that's what we did. We tapped into a 15-minute. We closed above, came back, and tap into a 15-minute. Okay, now that doesn't mean we're just going to take buys off the 15-minute. Once we tap the 15-minute, let's look for an inversion to go up, enter, and take off. Okay, that's what happened next. We tapped into the 15-minute, look for a fair value gap to invert. We inverted it. That's the last piece of the puzzle. And let's take off and check the EMAs. The finishing touch and last confirmation will be the EMAs aligned. We have the 200, the 50 underneath. This is the 200, that's the 50. And as we're inverting the 5-minute fair value gap, we are breaking past the 13 EMA. That's Bing right there. That is the secret sauce. You want to know how I trade? This is how I trade. It's mechanical. Now, should you trade it mechanically? No. If there's a fair value gap right above here, if we took liquidity already, like, be careful. But and depending on the type of inversion, like, is the inversion strong like this one? This is bread and butter. Okay, so don't be too mechanical, but this is a checklist: 4 hour, 15 minute, lower time frame, and then the 13 EMA. Let's put it together one more time. The more reps, the better. Okay, if you have to pause it, you better be taking notes on this. You're not serious if you're not taking notes on this. Okay, 4 hour inversion fair value gap. Okay, that doesn't mean we're just going to go for buys. The 4 hour inversion fair value gap, we have to wait for it to bounce. Just like this 4 hour fair value gap. What do we want it to do? Coming down here and bounce off of it. Okay, look at this fair value gap. Just because a fair value gap's created don't mean we sell. We wait for it to tap it and then we sell. Look at this fair value gap. What did it do? Came inside and then it sold. Okay, what is this fair value gap? We wanted to come tap it and go. Look at this inversion fair value gap. We wanted to come tap and go. So 4 hour inversion fair value gap, we wanted to come tap and go for buys. While we're inside of that 4 hour fair value gap, let's look for a inversion fair value gap. Let's look for a 15 minute. What did we do? We closed. We had the 4 hour inversion. We came back and tapped the 15 minute. Okay, we tapped the 15 minute. Now, as we tap it, hopefully it creates a fair value gap so that we can invert. That's our entry. Hopefully it comes back and taps it so that we can invert. Leave a fair value gap, whether it's a 5 minute, 4 minute, 3 minute, 2 minute, 1 minute. As we're coming down into the 15 minute, let's go up and invert it. That's gonna tell us that'll be the last piece, because if it was, well, let's go next. We tap into the 15 minute, bang, it creates a 5 minute and we invert. Okay, and the EMAs are aligned. That's the finishing touch. 4 hour, 15 minute, 5 minute inversion, EMAs aligned. I would not take this trade if the fair value gap got respected. If it came up like this and then it came down, I wouldn't take it. But what did it do? It closed above. That's how I know that it wants to go up, because this fair value gap on the 5 minute should stop it. But what are we doing? We're inverting bearish. We're inverting bearish fair value gaps. We're respecting bullish fair value gaps. We're inverting bearish fair value gaps. What is that saying in your brain? We're disrespecting bearish. What does that mean? We should be bullish. We're respecting bullish. What does that mean? We should be bullish. We're disrespecting a bearish fair value gap, making a 4 hour bullish inversion. Okay. We have a 15-minute bullish fair value gap, respected it. 5-minute bearish fair value gap, disrespected it. Go for buys, or else you're a donut. Okay. Break it down one more time. 4 hour, 15-minute, lower time frame, and then the EMAs. After we tapped into a 4 hour fair value gap and then a 15-minute fair value gap, we zoom into the lower time frame to see if it's actually moving in the direction we want it to. Additionally, depending on where we're going, make sure that the EMAs are aligned. Okay. If we're going for buys, let's make sure the EMAs are underneath us. If we're going for sells, let's make sure that the EMAs are above us. On the lower time frame, look for signs and signatures that we're going to where it wants to go. For instance, our entry model. Wait for the best inversion to give us an indication, then make sure the EMAs are aligned for confirmation. The inversion is an indication, the EMAs are the confirmation. We do a 3-minute inversion for buys. Okay, what does that mean? There's a 3-minute fair value gap, a bearish fair value gap, and then it gets inverted by a 3-minute candle. For buys is a bullish engulfing buys entry. But that's not it. Where are the EMAs? Underneath us? Let's go. Okay, so that is the 8P model. Okay, there are a bunch of examples, but I can't make this video an hour long. Okay, the second half of this is going to be the retirement model. That entry right there was way more than an inversion of 13 EMA. That thing had an inversion fair value gap, a regular fair value gap, it had an order block. I mean, this was a retirement model. This is how you make a lot of money. Okay, so we see this a lot. We see the example a lot. Okay, so that's gonna be part 2, the retirement model. Okay, watch this video a lot if you want to make money.